What's up, legends? Welcome back to Trade Travel Chill. I've got a pretty bigger deal to talk to you about today. Hopefully it's still there. I've rushed on to do this video because I've just seen something that I want to alert you guys to. But before I do that, I want to get into the play that played out yesterday. Hopefully you guys are following me on Twitter. I say this all the time. Because we trade small time frames over here, you have to be prepared for anything to happen, for the market to switch and change. And if something happens different to what I say on my YouTube update, I will make an attempt to post on Twitter for those who are not part of the Trade Travel Chill community, because that's what happens as traders. We're here to watch price action and react. And the faster you can do that without hanging on to emotion, the better it's going to be. So I want to talk about this trade setup right here that played out yesterday. If you happen to catch me on 𝗟𝗶𝗵𝗃𝗲 show last night, we talked about the possibility of this, and then I also did a Twitter update when I thought it was likely to actually play out, and this was that Twitter update there. By the way, just quickly, massive shout out to one of our tribe members, 𝗟𝗶𝗃𝗲. He has been with us for 6 months and has turned $100 into $10K using correct risk management and following the method and trusting the journey. So well done to you, my friend. I'm really so happy for you. Now guys, be sure to smash that like button, hit subscribe nice and early if you're not already subscribed, and turn that bell button to all so you can be notified every time I upload a new video. Very quickly, let's talk about what happened. Yesterday, we had this potential W formation, and the rise level 1 had already played out when I had done my YouTube, and we were in this retracement. I was hoping for a rise 2 for continuation to the upside, and I must say, this week's false move week beginning, it's been really a difficult one. It's not usually this difficult. I just want to point that out. Like, if you go back and watch the last 4 weeks of this channel alone, you will see that we've pretty much nailed false move week beginning every week. This week was tricky because they did the double-sided stop hunt out of the retail symmetrical triangle. So it was hard to pick which way the 3-day swing was going to go. And that's why on this one in particular, for a move to the downside, I chose to go for a conservative entry over an aggressive entry. So in this retracement here, I was hoping for price to be able to break through this trap trader zone. But as it got there, you can see here with this railroad track right here, that was your confirmation in the zone that we weren't going to be able to get through it. And that also gave us now the multi-session M formation. So the reason that I didn't take a trade right there, or recommend taking a trade right there, which usually I would, guys, that is the aggressive entry. There's 2 ways that you can enter trades with this method, aggressive and conservative, which is again why I love it so much, because depending on what suits your trading style, there is a way to enter trades that will give you confidence. An aggressive entry trader, which it's what I usually am, by the way, they're confident. They just want to have a tight stop loss, a large risk to reward. They don't care if they lose 5 trades and gain 1, because they know that when that 1 plays out, it's going to be a huge risk to reward. It's going to make up for any losses. So that kind of trader would have entered at the close of this railroad track, stop loss just above the wicks of these candles right here, because that's where the last damage was done, and rode that down into the top part of our large liquidations that we have been talking about on this channel for a while, between 28.7 to 28.8. Now, you don't try to ride that all the way to the bottom usually, because what if it doesn't go all the way there? It just misses your take profit, and it can swing around really fast and kind of take you out, right? But with this type of a trade setup, you had a 5.6 to 1 risk to reward if you just rode that to the 28.8. That's half your monthly target done. In case you're not aware, an amazing trader on average will have a 10% account growth per month. This is more than half of that done in 1 trade. So that was the aggressive trader kind of setup. I didn't go for that one because of this W formation, and it's not normal to have a W straight into an M. There should be 3 levels in between, and that's how you play it. Sometimes you choose to be more conservative because you want more information before you make a decision. So the second way is the conservative entry, which is you're waiting for an M or a W formation to actually play out, which means you're waiting for it to break the 50 EMA with volume, which is what it did on this candle right here. Once it does that, it then comes back for a retest. The retest is the confirmation of the M, and that means it's confirmation of a change change in trend. And that's what makes it the conservative entry. So a conservative trader would have waited for this candle close right here because you got a bearish engulfing that created a lower high after the M formation. It also could not come back into this vector candle that was formed on the inside of the M formation. So now this trap trader zone is gone. And that means you're pretty safe because it created the initial high of the day for today. And you could have taken a trade with your stop loss just above there. And if you had have written that down to the same target at just the top of those liquidation levels, it's a 4.7 to 1 risk reward. Both amazing trades and both setups just are designed to suit your personality. So what I had mentioned on that Twitter post and on the banter channel yesterday was if price breaks down from that level there and I'm not going to get my second level rise, the only way I would short would be if we broke the 50% Asia line. I'll explain what that is in a second, and then come back for a retest. And the reason I had to set that condition is because at the time price was here struggling to get back into that zone. So if I was going to have a second level rise, we would have broken through the zone. I could identify that we weren't breaking through the zone, so I had to come up with a plan B, and that was my plan B, was a break and retest of the 50% Asia. Now there's a couple of things that you should do to assess price action in Asia and what that may be leading into future sessions, because if you're a person who lives on a side of the world where you are awake for the Asia session, the Asia price action can set you up for the movement for the whole day, at least over until US, where sometimes US can be tricky and change the trend. So if you understand, you don't even have to watch the entire Asia session. If you just know how to assess what's happening in Asia, you can get a setup to ride for the whole day that can sometimes turn into a 3-day swing. And so here's some things. Number one, the Asia session is designed to set the initial high and low of the day. That range is usually no more than a 2% range. If Asia does something different than that, and it gives you a wider range than 2%, as a person new to this method, you should not trade that day. So instantly, all you need to do once Asia is coming close to finishing is you just draw where Asia opened, which is after the dead gap zone, which is grayed out if you use the market session times indicator. So you just draw your range from the bottom of Asia to the top of Asia. And we can see here we had a 0.94% range during Asia. That means you can trade that day. And it's an amazing first thing that you should do if you're just learning this method for the first time, because instantly you know, okay, I get the day off today, I'll come back and check tomorrow. And you don't waste your time looking at charts for the entire day. When we compare that to Asia today, because Asia made the move today, you'll see here that if we draw it from the initial low of the day to the initial high of the day, Asia gave us a 2.27% range. That means day off for you guys if you have not fully learned this method. Lucky you. Just know that that rule is only for people who are absolute beginners to the method. The second thing that you can use Asia for is to know whether price is going to move that day or it's going to be a boring day that is likely to consolidate for the whole day. And again, that helps you to decide whether or not you're going to have a day off. So the way that you decide that is you grab your Fibonacci tool and you take it from the low of the previous day, which is down here, that was this week here, to the high of the previous day. Now, if you have the TBD indicator, these levels are automatically marked for you. But in order to get the TBD indicator, you have to be part of our community. So if you don't have it, then you can still draw these manually. It just takes more time. You just have to zoom out between 5 p.m. to 5 p.m. New York, find the lowest point and the highest point the price went and mark that on your chart. So from here, when you draw fibs from your low of the previous day to the high of the previous day, if Asia opens around 50% of that price action, so that's in the first few candles of the Asia open right here, if it opens around 50%, you're probably going to have a ranging day. And we can see here that price opened just above the 50%. It was a wide range, but yesterday yesterday we actually did have a ranging day. If you think about it, price, the highest it went was up here, the lowest it went was down here, which was just a return to where it was at the beginning of the day. So that actually was a pretty boring range yesterday. So that's another way that you decide whether or not you're going to have a day off. The final thing that you should do with the Asia session is once the Asia session is finished, you grab your Fibonacci tool, but this time you're going to take it from the lowest point that price went during Asia. So don't include the dead gap zone. Just start from the open of the Asia session and find the lowest candle in the Asia session. It finishes here on this turquoise candle. You can see it. Again, this is on the market session times indicator. So you grab your Fibonacci tool, lowest point during Asia to the highest point during Asia, which was up here that created the initial high of the day, and you mark out the 50% fib line. Now, it is likely that during the following UK or US session on that day, that price will come back to retest that area, and that is where you can look for a potential trade. So 50% of Asia was here at 28,388, which was where I got the theory from that if price breaks below that line and comes back to retest it, that's where I'll get my entry to go short. In this particular case, it did take an extra session. Look, the rules aren't always going to be 100% that it's definitely going to happen per session. For whatever reason, it took a little bit longer, but nevertheless, it still played out that we broke the 50% line, we pulled away, we came back to retest it, price could not get back into the zone. Very interesting how this vector candle right here that I've marked out, this red one here, created the whole zone for that 50% rejection area. That's your trigger to short. So the reason why I, even though I'm an aggressive trader, decided to take the conservative approach on this short was simply because of this W formation and rise one. Now I knew that it was fake move Monday, but it was hard to know which one was the fake move, and it turned out both of them were. That's okay, that happens. But now everybody wants to know, well, okay, what's happening next? If you are looking for somewhere to trade this stuff, be sure to check out OKX. We've got a new deal for you guys. If you use the link in the description of this video, you can get access to a lucky draw. Let me show you how this works. So once you click on the link that is in the description of this video, you will be brought to this page. Just click on that Enroll Now button that you see, and then follow the instructions to set up a new account. Once you've done that, scroll down on this page and you will see the option here to have a spin. You can use just the one spin by clicking on the button on the left, and then that will give you a prize. Or you can click on the 5 spins on the right, and that will spin 5 times to give you a reward as well. And the more you trade, the more spins you get. So be sure to use that link if you're looking for an exchange to trade on and give yourself access to many free rewards. So now when you have a big move like that and it takes out a large level of liquidity, this area here between 28.7 to 28.8, we've been talking about that for a number of weeks on this channel. Now we have to do a full reassessment of where we are and see, like, is it likely that they're going to want even lower than that now, or is the damage done and we can now pivot to the upside? Remembering that midweek reversal usually happens on a Thursday, but it is lined up with a news event, so it can sometimes happen earlier than that. It can also happen later than that. So first of all, we want to understand pattern, the timing, the level. So pattern wise, let's start there. Because we've had a big move, we have to zoom out and we have to go back to the daily and see where we are within the daily vector candle ranges, and we can see that price is coming back into this one. We're going to do exactly the same and measure the 50% line of that area, and we've already broken that one, but we have not come back to the bottom of it. So now that we've broken the halfway mark, the bottom of it becomes the next area of interest for us. And interestingly enough, so that bottom of that candle is somewhere around 28.3. We also have a large 1 month liquidation at 28.2. So good zone for a target. It will also line up with this daily retail trend line, which I don't think that's going to be strong enough to bounce. I mean, we'll have to wait and see when we get there. But the reason I'm like meh about this trend line is we've already had the 3 touches. And the 3 touches, that's usually where a trend ends, guys, even though they say 3 touches confirms a trend. What we can see here is that in all of these rises here, look here that we've had declining volume. So we don't have confluence in this move to the upside on a large scale. So this is just adding to my thoughts that I'm waiting for price to break the trend line to confirm it. But at this point, I do feel that the move to the upside is over unless they hold the trend line and go for an extension. And we will know that if we come down to that 28.2 kind of area, or 28.3. So I've already gone ahead and marked the largest liquidation levels that we have both above and below price. So 28.2 is the immediate next target to the downside if we continue down from here. Then we've got 27.4 and 24.3. Above price we have 30,500 and 32,000. Now we go to the 4 hour. Now we know that this pattern was playing out pretty well on the 4 hour. So that to me looks like as high as it's fed up for now. So what we want to see is, are all of the drops done on the 4 hour? And what we can see here, this here is drop level 1 because it broke the 50 EMA retracement board meeting. Drop level 2 board meeting. Is this drop level 3 actually completed? Doesn't look like that much of a drop on the 4 hour time frame, but this one wasn't either. Like drop level 2 wasn't either. So really this gives us a hint that maybe level 3 is in, but we now need to go to smaller time frames to see, do we have a bounce out of that high liquidation level that is starting to set up to give us the W that will complete this 3-level drop on the 4 hour time frame. On the 1 hour time frame, you zoom out until your last peak formation high and you start your count from there. The last peak formation high was up here at 31,750. That's where we went short from. That's what I call a Linda trade. Hopefully some of you are still in the Linda, but this is your information. Drop 1, retrace, drop 2, retrace, drop 3 potentially is level 3 over. Looking good for the moment. Now we go down to the 15-minute, because if the drops are over, we need to get a strong move out of the zone. So let's now dissect these candles. This is why you can't, in my opinion, you can't just pick a price. You set targets, but once it hits your target, you need to reassess what's actually happening at that time and whether or not it's time to change your trend, or are we coming down for a lower level. So here's the first thing. This is the big spike into the initial zone. We're going to expect that when it's such a high level of liquidations, right? We expect that because that is those getting triggered really fast, right? So of course we're going to have a wick out of that zone. That is what forms the first side of a W. If you're going to get a second side of a W, there will be an attempted return into the zone, but it won't close all the way into that wick, and that's what gives you a W. The problem when you hit such a high level of liquidations is that sometimes you don't get the W and you just get a V-shaped recovery. There are ways to trade that. It's too advanced for me to talk about on today's video. But then finally, the other thing you want to assess is, what do the candles look like in that zone? Because what happens is the market makers make this move, then they sit back and they see how retail reacts. Are retail happy to buy? Do they consider this buy the dip moment, which means they're all going long here? Or are retail now scared and thinking, oh no, it's over, the move to the upside is over, and so they're opening shorts at the worst possible time, because as we know, it's level 3 potentially. And so that's what happens when you can't see vector candles turning up within the consolidation after a big move. Market makers sitting back and watching like top G. So why did I just say that? So what happens here is we look to open interest. This is going to let us know, is retail sitting on their hands scared, or are they happy to commit? And which way is that consolidation going? So because we have this rising open interest after this drop to the downside, and we also have a very small rising trend, I would draw the conclusion that retail considers this to be a buy the dip moment, because the increase in open interest is increase in confidence to open a position. Even though it doesn't tell us which way, the price then tells us which way, and the volume tells us who is doing it. So who's doing it right now in this consolidation period? Retail. Which way are they going? Long, because price is moving up. Are they happy to commit? Yes, because the open interest is rising. Great. So now we know where we are. Let's have a look at what's going on in the heat maps. It's gone now, damn it, because I wanted to show it to you live, but right under price, just on this candle here, not too long ago, we had 3,000 Bitcoin worth of orders going long. This was about, price is 28,983 now. The orders were at 28,900. So price is potentially moving up because of those orders now. That's extremely large. If you watch this channel, I tell you to look for anything over 1K. What we need to see now is if shorts come in above price to push that back down. Because if shorts come back in now, then what will happen, or not now, but anytime soon, then what will happen is if shorts come in here, then we can sit on our hands and wait to see if we get the second side of a W. If we get it, shorts will come in here on the heat maps to push it down. Then longs will open here to give us the higher low. That's when we strike. That's when we bag flip and take a long position. If none of that happens, we don't have a reason to exit shorts. We have a reason to take some profit though. You should already have done that because price hit our target, and you should already have moved your stop loss into at least break even so that you can't lose now, or into an area where you've locked some profit in at that level. But just keep in mind that at the time of filming this, price is still under the 50 EMA. So don't automatically long out of the zone, because if price continues to reject the 50 EMA, knowing that we do have high level buys below this price here, and we have liquidation levels, trend line, like just all the things I just talked about, it is possible that we reject the 50 EMA and then come down into these longs. So that's why you don't automatically buy on the left side of a W. You have patience and you wait for the right side to form, because if it doesn't, you're still in your short position and you've got nothing to worry about. You get to stretch that out for a little bit longer and collect more profit. And then if it does break the level and come down even more, then that's great. You just start the entire process again. Okay, we hit into the buy orders, we hit a liquidation level, we've got the left side potentially of a W. Do I have my right side? What if it turns out to be a V bottom and it just shoots up and doesn't give you the right side of the W? Doesn't matter. It will break the 50 EMAs, it will change structure and come back to retest them. And that's when you strike. So never guess, never assume just because price went into a liquidation level, we're going to change trend now. Because one thing we can't know, we can identify as retail traders where those high level liquidations are. We can make sense of why the price would go there, but we can't know if enough damage has been done to us that benefits the market maker. We don't know that part, and that's why we turn to price action to go, okay, looks like the damage has been done. I can see the start of a trend change with the W formation, or I can't see it, so I'm holding off. So that's pretty much what I really just wanted to talk about today, guys, is what's going on the heat maps. Look, this is starting to look like a railroad track that's going to reject the 50. So at the end of the day, I'm still short and I'm staying short. If price rejects this 50, that's fine. If it gives me a higher low, maybe towards the end of UK, and it's looking like a W, this higher low here has to give me bullish candle structure, a hammer, a railroad track, a star formation, a bullish engulfing, you know, all those. Learn your candlestick patterns. Learn your candlestick patterns. It has to give you that. If it doesn't give you that, you chill. You take some profit, you move your stop loss, you go to bed, we come back. Well, I don't know if it's your bedtime, but it will be mine by the time US starts. We come back and then we have a look and we just start the whole process again back down here and see if we get it there. We don't get it there, no worries. We hang on. This Linda is just becoming more and more of a Linda. The more that price comes down into these lower levels, the more Linda Evangelista we are manifesting, guys. And for those of you who don't know what a Linda is, I'm going to find a picture for you and edit it in here. But Linda Evangelista was a supermodel back in my days when I was young. And one day she had a very famous answer to a question she was asked on an interview. I don't know what the question was, but her answer was, I don't get out of bed for less than $10,000 a day. And back in those days, that was an extreme amount of money to earn in a day. And everybody went wild because they took it the wrong way. She was joking. So that's what we call a Linda. Linda is, it's not about the 10,000. It's about that was perceived to be an extreme amount of money, an extreme win for her. So in honor of Linda Evangelista, when our trades feed up from a 15-minute time frame, when they feed up into higher level trades, so this initially was taken as a 15-minute time frame trade, but we identified that the levels were starting to play out on a 4-hour time frame. Now if you got the trade off the 15-minute time frame and you're still holding it because you identified that it's fed up in levels, and as you watch it, as it feeds up, if it does end up coming down into these super low liquidation levels, this here has the potential, if it does eventually come down to 24.3, that is a 20-to-1 risk to reward trade. So that's what we call a Linda. Many conditions before we get there, not saying that we are going there, but for those who do have that trade, there isn't a reason to exit at this point in time unless we come back for the second side of the W. Now, what happens if we break the 50 EMA and we don't come back for the second side of the W and this does turn out to be a V shape? Like I said, no problem at all. Let price break the 50 EMA. Hopefully it breaks with volume. That's what you want. If it just breaks it with gray candles like this, I wouldn't worry about that. It could just be price still forming the inside left side of the W. But if it breaks it with volume, it will come back at some point to retest the 50 EMA. You're looking for the exact same kind of candles: bullish engulfing, hammer, star formation, railroad track, all of those things that I told you to look for down there. You're looking for them here. That's where you can exit your short position and bag flip to a long position if it happens in that case instead. So guys, I hope you can see that it's not about the price. It's not about, you know, if price comes back to 28,820, go long. It's not about that. It's about the movement and understanding the pattern. And if we come back and create that pattern and then the final trigger, so you have your setup, you have your trigger. We are creating a setup now, but you don't act on the setup until you have the trigger. And the trigger is always those final candlesticks. Finally, the other thing is, remember pivots, if we're going to have changes in trend, they usually come on the announcement of a news event. So we want to line that up with something. The only things we've got going on today is ISM manufacturing and JOLTS job openings. They're at 6 p.m. Dubai time. Don't forget, you can go to this website, forexfactory.com/calendar. Click on this right here and set that to your own time. It's not 9:09 a.m. Anastasia. Here we go, it's 1:10 p.m. So yeah, you can set this to your own time zone. Then you can get these times in your time zone, so you don't have to convert what I say. But we're looking at these ones for later on today. If they don't cause the change in trend, the second side of that W formation, we just come back tomorrow. We're looking for this one. If we don't get it then, we're looking for these ones. But just be prepared for this to potentially turn into a 2-week trade. So it could be that instead of having midweek reversal, we go into whole week down for a pivot next week. I can't say if that's going to happen yet. We have to see as the levels happen. But if I think that's going to happen, I will for sure keep you updated. Just a reminder, grab the links for my other social media from the description of this video. There are so many scam accounts out there on every social media that you can imagine that are imitating me. And on that note, I will never DM you. So if you get a DM from someone saying, you know, I'll invest on your behalf, or you should join this platform, or I don't do that. I don't even DM and tell you. Like, I don't even answer DMs when people message me and say, how do I join TTC? Like, and I want to help you, but I'm just like, I have a website. Figure it out. www.𝗏𝗏𝗃𝗏𝗃.club. Find it. But point being, I intentionally never answer DMs and I'm going to never send DMs because I don't want that to get misconstrued and confused with the scammers that do DM you. So be sure to grab my official social media links from the description of this video. Follow me there. If anything changes from what I do on my YouTube updates, I try to let you guys know on Twitter if I can. But honestly, the best way is to just join us in the Discord. We've opened our free Discord again. There are conditions to join because, again, we want to keep the scammers out. So just grab that link. The Discord link is in the description of this video. Click on that. It will give you instructions on how to join. That's the best way because I'm updating you guys all the time, not just on entries, but also management of trades and bag flipping trades. So number 1, join the Discord. Number 2, join the social media if for whatever reason you can't join the Discord. Number 3, if you want to learn this method in full for yourself, because guys, I will die one day. Gonna happen. So learn this for yourself. Like I tell my tribe, my number 1 goal when you join TTC is to get you to not need me as fast as possible and then choose to stay. That's my goal. So if you want to learn this, learn it for yourself. That is the only way to become truly independent. All of that information is on our website. All the other links, everything else, exchanges, it's all down there. Check it out. Consider joining the family and I'll see you guys tomorrow.